What's up, my fellow traders? Hope you're all doing well and I hope you're all having an awesome day. So a very quick update here for nat gas, gold and crude oil, starting with natural gas. So what do we have here? So right here, as you can see, I've mentioned in my yesterday's video that we can expect a double bottom pattern if we have a signal. Now, I do not see any sort of signal, and if you just enter just by hitting off this rejection area, then that is something I will never recommend, because we only enter buy or sell trade once the price action give us a signal. So that is why we will have that edge in the market, which is these price actions and which are these signals that is created by these price action. Now if you look at this candle, that is not a 382 candle. If you see the Fibonacci tool right here, as you can see, the 382 retracement is over the body, which is not a 382 candle. Right here, as you can see, the price is now in a very strong downtrend. We do have a break and close below this box, but we have a different situation on Owanda right here. So as you can see on Owanda, the rejection area is still intact, but again, I won't be entering a buy trade until I have a very strong bullish engulfer right here. If I have that, a very strong bullish engulfer or a 382 candle, only then I will be looking to enter my long trade. Otherwise, I'll still wait. We have a very strong bearish pressure. If you go back on weekly time frame right here, if you see, the price is falling down from the zones with this engulfer right here, with this engulfer, now with this engulfer, looking at a very strong bearish momentum. And if I want to show you this inverted hammer candle that is likely to form, if that happens again, guys, we have a very strong bearish pressure. So looking at that, we have a chance that price can fall down to here on Owanda 3.071 goes up to 3.225. So I won't be entering buy unless and until I have a very strong buy signal, the one I've just mentioned. And right here, if you see, price push down, pull back, and we are getting a bearish engulfing candle. But looking at the fact price is still within this previous low, this candle closes below right here, then we have a confirmation that the price is likely to retest again and fall back down to this level right below, which I've just mentioned. So be careful here. Do not just enter long trade blindly here. I want to see a very strong bullish engulfing candle that fully engulfs the previous red candle or a 382 candle. Once that happens, only then I will be looking to enter my long trades. Here on currency.com, if we have a massive fall, the next zone is 3.033 goes up to 3.203. This is the zone from where I want to enter my long trade. This is again a minor zone below, not a major zone. Major zone is below that. So looking at all the factors, I'm still looking at a bearish pressure. No, we do not have any sort of bullish conditions yet. So I'll keep you guys updated with the moves. Hit the subscribe button so that you won't miss an update. Let's move on to gold. Okay, awesome. What do we have? Let me quickly show you what I've said in my last video so that we can understand the entries. The price still did not make it to the 50% retracement, but it did retested the zone right here, which was the previous level of resistance. Now turns at this point. I'm expecting price to still push up at this point around $9 from this retest candle, and the $9 is around till 1883, from where we can exit our trades and look for the further pullbacks and continue to take longs. So nice one. What did I say yesterday? Now, like I always say, ATR is really important. That keeps you with the volatility of the market, and if you go against that, then there's a likely chance that you will have a losing trades. Now, what I mean by that, as you can see, we did have push up, pullback engulfer that is formed at my level of support that was previously a level of resistance, and I've clearly said that this is an entry candle right here. And from this entry candle, the ATR, if you see above top left, is 9.8. let's do it 10. So from here the ATR was 10, so I will keep my take profit and stop loss 10 pips above and 10 pips below. From here, from the entry candle, if you see, price did push up 12 pips and then quickly fall. Now if you do not take your profits, what will happen? Your price come up in a profit, then quickly fall, and then you will have a loss if you did not manage your position. So that is why I always say ATR is really important. If you are taking your stops and target, make sure you do it according to the ATR. Now my ATR is different for different strategies. For that, you have a premium plan. If you want to check that out, that is on my website. But roughly I use 1 ATR for commodities, 1 or 2 ATR for commodities. Now at this point, what to expect? Price is still not bearish yet. As you can see, the price is pushing up in a nice uptrend. we can still expect a push down within this zone. Price can still push down till 50 EMA. As long as price is above 50 EMA, we are taking buy trades. If you see price has made a new high, pull back, then made a new high, we have a pullback and then pushed up. We have a new high, we can expect a pullback and we can expect a nice bullish candle here, and then price can likely to push up and continue with the trend. So I will enter my long trade again with a good bullish condition. So not selling gold at this point, look for buying opportunities until the price hit this next good level of resistance. So what do we have? Price is now pushing down since our last signal here with a double top move, and price is still pushing down. Now if you want to buy silver, have these minor zones on your chart, which is 22.65 goes up to 22.95. This is the zone from where we can expect a good bounce before the price can likely to push down. Make sure you have your take profit set so that if the price hit your take profit and then decide to continue with the trend, you will have your money in the pocket. So this is the minor zone below. Have these zones on your charts. Once the price hit this zone, I will look for an entry conditions like my bullish engulfers or double bottom pattern. Let's check crude oil. Right here, crude oil has not broken above this high, means the price is still in between this range. So I'm still waiting for the price to break out above to take my longs or break out below to take my sell trades. So just wait for the price to give you a good confirmation of trend. We will enter our trades accordingly. We do not have to be in a trade without any condition or without any reason. So wait for a good condition. This is our hard-earned money and we do not want to donate this money to the market. Enter the trades with a good condition so that we can have a likelihood to have more winning trades than losing trades. So that is it for commodities, guys. Any questions, any confusions, you can always buzz me on Instagram. I'll get back to you ASAP. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.